Hi, I'm Sean, host of NerdWallet's Smart Money Podcast, and today you're going to learn all about tax season 2024. We're going to answer all sorts of questions about filing taxes this year, including what's different in 2024, when you might get your refund, and how to actually go about filing your taxes. And to help us answer these questions, we are talking with Bella Avila from NerdWallet's tax team. So before we get into questions, a quick note that Bella, Sara, and I are not tax pros. This is not financial advice, just some nerdy food for thought as you, dear listener, think about your own taxes this year. So with that out of the way, Bella, let's start off with a question that might be on a lot of people's minds, especially if they are inclined to procrastinate. What is the tax filing deadline this year?
It's April 15th this year. And if that date seems to be creeping up on you a little bit, remember that you can always apply for a 6-month extension, which extends your deadline to October. This gives you more time to file your taxes, but it doesn't actually give you more time to pay them.
So another important date people may want to know: when you get that refund money, assuming you get it. When can people expect to receive their tax refunds after they file?
That's a little bit of a tricky question because it really depends on how you file your taxes rather than being a specific date. Filing your taxes online is definitely a way to get your refunds sooner. Usually you can expect your refund about 21 days after you file your return if you filed online, your return was error-free, and you chose direct deposit as your refund method. But mailing a return means the IRS could take up to 4 weeks just to process it, and you could wait up to 6 months to get your refund. Some good news is that the IRS increased the income threshold for its free file program. And for those of you who might be unfamiliar with that, each year the IRS gives taxpayers access to brand name tax software for free. Some software partners even let you file federal and state returns at no cost. So anyone who made $79,000 or less in 2023 is eligible for the program this year. And then a brand new thing for 2024 is that for the first time ever, the IRS created its own free tax filing software called Direct File. Direct File is being rolled out in phases, so it's still in its early stages, and it's only available in 12 states. It can't be used to file business or self-employment income. You have to take the standard deduction, and you can't claim certain credits that you might otherwise be able to. And then it's also worth noting that Direct File doesn't prepare state returns. So if you live in one of the 12 pilot states and you have a simple return, and you had already planned to take the standard deduction, this could be an option to consider.
Okay. And speaking of the standard deduction, that got an update this year. What's happening there?
That's right. So when filing, people can choose either the standard deduction or they can itemize the deductions. The standard deduction is definitely more popular because it's easy and it benefits most people. It's also indexed for inflation, so that basically just means the amount you can deduct gets bigger each year. For this filing season, the standard deduction has increased to $13,850 for single people and those married filing separately. It's $27,700 for people married filing jointly and qualified widows or widowers. And then finally, it's $20,800 for heads of household.
So last year, a number of people had to restart paying their student loans, which is the worst. Sorry, everyone. But there is at least one bright side of that, besides your student loan balance starting to go down again. And that is potentially being able to write off student loan interest when you do your taxes. So what should folks who have student loans know about that?
There's something called the student loan interest deduction that can shave off up to $2,500 from your taxable income for interest you paid on federal student loans in 2023. So this can be interest you paid on a student loan for yourself, for a spouse, or dependent. There are some stipulations, though, because it is the IRS. You can't claim this deduction if you're married filing separately, if your modified adjusted gross income is above a certain amount, if you're dependent, among other things. But there is one nice thing about this, which is that you don't have to itemize your deductions to take this. I'd recommend reading IRS Publication 970 for all the details.
And for those who might be curious, how do you know what your tax rate is and how is it calculated? Because there's always people who are like, oh, I don't want to get a raise because then it's just going to completely get eaten up by taxes, which is like not true. So how do tax rates and tax brackets work, essentially?
Yeah, that is a common misconception. There are actually 7 federal tax rates, and portions of your income could be subject to different rates depending on which brackets you're in. A bracket divides income into chunks so that it's not taxed at that one rate. And then, of course, filing statuses come into play here too. If this all sounds really complicated to you, don't fret. I'll show you how it all plays out with an example. So for tax year 2023, which is the taxes we're filing this year, if you're a single filer who made, say, $70,000, the highest tax rate you're subject to is 22%. But you want to note that I said highest. That's a key word here. Not all of your income is taxed at the same rate. The first $11,000 of your income is taxed at 10%. The next chunk up to $44,725 is taxed at 12%. And then it's only that last chunk of your income that's taxed at 22%. But to see how this all shakes out for your specific tax situation, you can visit our tax brackets and rates page.
Thanks for watching. I'm Sean Pyles, host of NerdWallet's Smart Money Podcast. If you learned something new, hit like and subscribe, or listen to full episodes of Smart Money wherever you get your podcasts.